Hello guys, welcome back to another video, which is why every time is not important. Now firstly, I know my videos are boring because you do not listen to any music or anything like that, because I do not believe that you guys here for some entertainment. When you are learning something, you have to be serious, as I am for you, and I was serious when I was learning all this thing. Now here's the thing. Now this is a daily chart of ODCAD. Alright, and if you see ODCAD, I have already marked a resistance level over there. Now this level is a resistance level, but I'm trading this with a $500 account. Now what is this? You notice something. The wicks are basically, these are the stabbings. Let me tell you what does that actually mean. Now this is the line, okay, and on this line all the wicks which are touching to a point, a price, here it is crossing that point as well. Now what is happening over here is the hedge funds, the traders, the big giant banks, they are stopping you out right about here, and they are just grabbing the liquidity. And here we go. You notice the candles are closing below this line, which means this was just a liquidity grab. Now it does not mean that this will not happen on a daily candle, or you can make up your mind, oh, you know what, 3 minutes or 5 minutes, they just are bullshit time frames. I'm gonna work on the daily candle. I'm gonna buy right here because I know this is a resistance zone. Now what is this? What and why is this? Okay, you will include this little wick into this zone. Let me do that for you. Okay, here it comes. It is included here, but you will notice still, if even we have included this a little bit, these are still away. And this resistance, you would have said I will sell on this resistance, but the sell happened here. Now in a nutshell, what I'm trying to explain is that every time frame, this was a daily candle. Let me go to yeah, okay, this is GBP JPY 3-minute candle, because I only trade small time frames and do not look for any confirmations. Confirmations is just a distraction. If you trade 3 to 4 trades a day, this is just distraction. Now let me just zoom in and show you what is happening over here. This was a resistance. What is this? The price went up. This is a liquidity grab. Now what is this? This is also a liquidity grab. This is also a liquidity grab. Okay, now what I'm doing here is, suppose this is your resistance level. Okay, you marked it right, but what is this? This is again the hedge funds came and they just stopped you out. No matter what time frame you are going to use, on every time frame you will feel this pain. Now see this is a straight line. What was that? This is a knife. This thing is a knife for you. This is a stabbing of the knife right here. These are all the stabs which the hedge funds, they will actually stab you, take out your position, and they'll go. And this can also happen in a monthly candle as well, no matter what time frame it is. I know this is a selling zone, but when you're trading the zone, when we make up a zone, we do not know that from where the price is going to jump back again. At here, this might have come in between, or would have gone all the way down right about here. So we are confused no matter what time frame we are using. So why you should not trade every time frame is because every time frame is going to give you certain things which you are not expecting. Now see, this is the resistance. A very nice zone has created and these are all the resistances. What happened here? What exactly happened right here? The hedge funds came, the big banks came, took the liquidity, took your stop losses. They were right about here. If we go back and see why it was here, because it was the opening price of certain candle, which is right about here, and after a long wait of months, still it stopped out. Now when you see this on the daily candle, what is this? Stop out. What is this? These are the knives, these are the stabbing, which they will stab you, and eventually they will grab the positions in the market in the way they want the market to be closed. Now this is a daily candle of GBBJPY. Okay, now in this, now what is this? If you disagree with the zones which I have created, I have created these zones by doing a lot of back testing and back research. Why? This is actually a calculation of pips. GBBJPY, it's about 100 pips right about here. The zones are almost of the same sizes, which are the major zones, and the small zones have some small sizes. But still, if you work hard and look for these zones, still they will stop you out. There was no reason for the price to go all the way above and then coming down. Why did it? Because they need to have some space in the market. This is what we call liquidity. So I used to trade a daily time frame, but eventually I saw this happens in even weekly, this happens in even daily, 3 minutes, 1 minute. So it's better to stick with a small time frame and do not look for major resistances, because on major resistances it's going to happen again. So what I do, I have a simple policy and rules that you always trade in a certain zone or in a certain time frame. This right here is 8:30 candle, and I always trade near 8:30 till 11. I follow the ICT, what they have taught me, and that works. Why you're confusing, you go back to a daily time frame and then you come back and then you see again 3 minutes. You don't have this much time. Don't look for confirmations. That if you still you have learned so much that even you have got confirmation from the daily zone, then you'll see the RSI is down here. Oh, the RSI is oversold. Why? Overbought, but I'm still going to buy this. Why? So lots of, make your chart simple, and just don't worry about switching the time frames. It's a 3 minute, okay, let me see back into a 5 minute, 10 minutes, 1 day, 1 week. No, these things will always stop you out. Then eventually what you'll say, oh my god, daily doesn't work, let me jump into monthly, let me jump into weekly. Everywhere you will find these liquidity positions, unless you have a very big account, let's say about $10,000, and you are a swing trader, that you will buy from here and then you will end up selling in the next zone or closing your positions here. Now what it did here, the stop losses, you see this area, this was the resistance, but here stopped you out. So I've studied a lot that why this happens, and my answer is simple: don't go for bigger time frames. Most of the successful traders, they make trading in smaller time frames. So best of luck for this video. Until next time, bye bye.